We are live.
Live, living in the city.
All right, welcome again. Another Thursday. We are the Triple Profits Podcast, and today we got another good show. A good topic for, especially for this time of year. Today's topic is the best time to buy real estate is. Ooh, that's a
dot,
loaded
dot,
question.
dot. Yes,
Loaded
sir.
question.
Yes, sir. What's going on, Marcus Money Man?
Yes, sir, man. So we got the champ of real estate here, and we're going to talk about real estate today. So, champ,
Favorite. It's my favorite.
what you think, man? You know, the best time to buy real estate is when you're doing the
Man, yeah.
transaction.
Yesterday, last year. It's always the best time to buy real estate is always now. And one of the reasons I know kind of wanted to bring up this topic because I get a lot of questions about it. A lot of people are waiting for the crash. They're waiting for the bubble to burst. They're waiting for prices to dip, um, which I totally understand. Everybody wants to get a good deal. You know, whether I don't care if you're buying a house, if you're buying an iPad, if you're, shopping for a TV for Super Bowl Sunday, everybody wants a deal. You want something cut. You want it. You want a price cut at the end of the day. The reason it's not as feasible to do that with real estate. Um, one with real estate in the current market right now. Um, Even if we do have a bubble burst, it's not going to be what we saw in '06, '07. It's not going to be what the housing crash looked like. And Marcus, you know that you've done a lot of loans.
Yep.
The loans that were built in that time frame were rickety loans. They were very, very unstructured loans. People were getting qualified that probably shouldn't have been qualified, with deals that were structured to rupture underneath them.
Hey,
And go ahead, go ahead. You look like you want to add on to that.
I was gonna say too, like, because it's just like what you said before. The best time to buy real estate is like yesterday, because you look at the loan structure, and again, I'm no longer a licensed mortgage loan officer.
Okay. I like how you clarify that. I like how you clarify that. But I know my shit. No,
exactly. So when I bought my first house in 2008 in April, and we all know what happened in 2008, right? With the big crash. I had no idea about anything that was going on. Even when the crash happened, I was like, man, that's messed up for people. It didn't really affect me because the way that I purchased the house at that time, it was in my budget. So prior, people were just buying up houses, buying rental properties, getting these amazing interest-only loans, and refinancing over and over and over. You never have to pay the consequence. The home values are just going through the roof. And I think when I purchased my home, I bought it in my budget. So when everything just went down, well, you have to have a place to live.
Mm-hmm.
Right? I had to have a place to live. It didn't matter if my home value dropped because it was in my budget to pay my mortgage. And it did. When I bought my home, it dropped instantly in value. But the thing about it is rental prices never went down. So when we moved to California and it was a rental, it cash flowed.
Gosh, you're still making money because people needed somewhere to stay.
People needed some place to stay.
Mm-hmm.
And eventually it went back up. And right now it's double what it was when I purchased it. Now, I wish I still had it. That's a whole nother show.
Reasons to hold on to real estate.
Exactly. But yeah. So anyway, the loans that were done after that time, there are a lot more paper, there were real paperwork and checks that take place afterwards. Whereas before you can put that you made, whatever, 100,000, 200,000, and you didn't even have a job and you get approved for a mortgage. So it's totally different. If you can go through the process right now and get pre-qualified to buy a house based on your actual income, you're going to be fine because you have to have a place to stay.
I love that's a great point you made too. Within your income, make sure you are budgeting out the correct income. Don't try to get something keeping up with the Joneses. That's going to end up, and I totally get the whole American dream and having the home look a certain way or whatnot, but understand it's always better to get something within your means and then level up in the future. Because as you stated, in most cases with real estate, the value is going to steadily increase. Because when it comes to real estate, it comes to land, they ain't making no more. God ain't making no more right now. What's on the earth is on the earth. So if you can get a piece of pie, get it, hold on to it, make sure it's within your means, and let the value increase over time, as it's always done. And then when it's time, when you're in a better situation or you develop a lot of equity in that property, you can always pull it and level up to the next big property that you're actually.
Equity. You get some equity in the property. For the people out there who don't understand what you're talking about, what are you talking about, equity in the property? How do you get such a beautiful thing?
So equity just develops over time as you're paying it happens both ways. One, with you paying off your loan, you're developing equity. As Marcus said earlier before, you have to live somewhere. You're going to have to pay to live somewhere. If you're currently renting, what you're doing is you're paying someone else's equity. You're paying off their loan and you're putting a chunk of equity in their pocket every month. Okay. Why not do this for yourself? So basically, every time you're paying off that monthly loan for your home, you're basically, instead of, it feels like you're paying the bank, but in reality, over time, you're paying yourself. You're paying that money back to you. Okay. But then also what happens too is as home value increases, you also get more equity. So perfect example, one of our clients, Ty, we reached out to us within less than a year of having their home ready to refinance, and they had already had about $70,000 worth of equity in their home, just due to the fact it wasn't as much that they had paid that much yet, but it was because home value has increased so much in the short time that they've had their home, the value of their home went up. So they already had about $70,000 worth of equity in less than a year. So it's one of those, it's one of the beautiful things. It's kind of like it's almost like a stock. It's like putting money into a good stock and letting the stock just develop over time. That's basically what happens with equity.
It is. And that was the one thing I didn't really understand when I first bought a house was, I was just like, all right, I paid 110, I think, for the house originally. And it's like, okay, I've got my FHA loan. I did 3.5%, plus my fees and stuff. I was like, cool, I got it, broke it off, used my income tax refund check, to fund that part. And, we got the house. The thing for me was, it's like, okay, I got it at 110. I'm like, man, I'm paying a lot of money. I didn't realize that I'm paying the loan and the house value can go up.
Mm-hmm.
And if you think about that, people live in places their entire life. And I plan, as long as I live, to live in the place. So if I have a structured 30-year loan, I know if I pay on time over 30 years, the loan will be paid off. And over that 30 years, the home value will go up, or, in some cases it may go down, but most places here in America, it's going to go up.
Mm-hmm.
So you're paying for something that you're going to pay for anyway. The value in the home is going to go up over time. So you're right. It's almost, to me, it's better than having putting money into the retirement fund, trying to figure out, how much am I going to put in there? Although the returns on the retirement fund, we could do a whole nother subject on
Hold an
401k.
episode on that, yeah.
Man, stuff I didn't know 5 years ago. That's what we're gonna call it. But it's really good too. And depending on where you buy your house at, it could be just as good of a return. So when we bought this latest house here in Bakersfield, I told my wife, like, this is our $1 million retirement fund right here, because we got it at such a good price. And even over the last 3.5 years, we just got an extra 120, 30,000 just in equity in this house.
See. And that's cool. And that's the one beautiful thing with it. Like when you think about equity, even if your home value doesn't go up too much, you can still cash that out. You can still you can still use you can still pull money from that. If you're like you said, if that home just stayed, even if it just stayed even at 110,000, it didn't go up, you can sell that home, pull that money, go do something else with it. You can pull some of that money, refinance, whatever the case may be, and use that equity towards what you need to, whether it be a family emergency, you want to start a business, one of the kids are going to college, any of that, you can use those funds because you're basically, like you said, almost like a savings account. You're putting that money every month into the bank because you got to pay for somewhere to live. If you're renting, you can't do that. You know what I mean? That money is just basically disappearing into the ether. Somebody else is getting that. Somebody else is going to use that money to pay for their kids to go to college, pay for an emergency surgery, whatever the case may be. So that's one of the greatest things with that equity. It's like you said, even if the home value doesn't increase, you still have money there. If the home value increases, you got even more money there.
I mean, it's so many advantages of being a homeowner too. Yeah, and a lot of places when you do buy a home, your payment is going to be more than what you would pay in rent, typically, and that's because obviously you're buying a house, you're moving on up, right? You're not going to buy a house in the same type of area that you're renting at for the most part, unless you're like my wife. So love you, babe, but but
I didn't say it, D. I didn't say it. I didn't say it.
But for the most people, man, you moving on up. So you're gonna expect to pay more because the cost of rent is gonna go up. You get your fixed mortgage, it's gonna be fixed, right? And then also it's different things you could do with just by owning the home. You talked about cash out refi. That's one way. You can have a HELOC on it. As it gets so much room within that mortgage, you can be able to have a line of credit based on the collateral of your house and be able to use some of that to do other things, to buy a rental property, right? Obviously you got to have good credit scores and stuff like that, and it's important, and you should have that. And you can't have that if you ever plan on buying a home the traditional way, but you can use that to buy other rental properties. You can do that to buy businesses. You can use your 401k to buy your house. You can use your 401k to buy businesses. It's so many unlimited things you can do with it.
It's endless. The possibilities are endless with it. That's why, like I said, when I get a lot of people that ask, like, should they wait it out? Should they buy? Go ahead and buy. If you can afford to buy now and sit. Buy now and sit. Don't try to sit and buy later.
Yeah.
Okay. Because that's one of the things people don't understand too, is that if the prices of homes do drop, well, guess what? Price of borrowing money is going to go up.
Yeah.
Your interest rates are going to go up. It's a balance. I know, like I said, this is more your will. Well, even though you ain't fully licensed in that field anymore, I know that's your will. Well, you know that just as much as me, that when the price drops like that, then all of a sudden you start seeing these interest rates start creeping up. So you can end up paying more over time for the same home you were going to buy now with the lower interest
rate. Oh yeah, 100%. And it's and what we used to use was a cost of waiting calculator, and it's just mathematics. You're going to pay X amount a month for rent and other expenses. When you buy a home, you're going to have X amount for your mortgage. Some people take the method of wait until they have cash to buy the property. all up front. Why should you not do that? That's a I mean, it's so many reasons why you shouldn't. Some people just want the security. I'm
Yeah, I
gonna,
was just gonna say that.
take this 200,000, 150,000, buy my house cash. Perfectly fine. You don't have to pay monthly anything. Your property is still going to increase in value, but you're missing out on opportunity costs, right? So your opportunity cost of doing something else with that money. So right now, all your money is in that property. So if it does dip down, you're only going to be able to pull out X amount of percentage, usually up to 80% of what the value of the property is. So you're basically taking your money, putting it in a bank, and you could be doing other stuff with it. You could take, instead of just taking 20% where you can feel more comfortable, get the best rates, get the best, mortgage payment, put that in there, even 40%. You could take the other 60 and buy you a couple rental properties with that.
Right. Get some cash flow.
And right. And so now, you could basically have somebody else pay for your mortgage plus some
Mhm.
with the cash flow. So if you ever lose your job, you're not dependent on anything, where your meal
Right.
is going to come from at that point. So I
You
don't know.
aren't
But
scrambling. I totally agree. And that's definitely a balanced game of what exactly you're looking for. Like you said, having that cash, I think that's definitely the smarter way to do it. I totally understand why somebody would pay up front, like you said, not have anything over their head, not have to deal with it. But once you start understanding, especially like if you want to use real estate as a financial vehicle, you definitely you want to use other people's money as much as you can to invest in that, you know, because it like you said, you can basically parcel out all that cash. That's a big chunk of money, and have down payments on several different homes and be bringing in cash flow. And then same thing, once again, someone else is building up your equity over time. Like even if, like say, if it was three, you had three different homes, and that I was just telling we were just talking about our other client. That's 70,000 worth of equity in a year in each home. Now you got $210,000 worth of equity throughout all of these homes. So it's still the money comes back to you.
the money comes back, especially in real estate. It retains value. I mean, it's so. I think that's why a lot of people are so attracted to it, and they probably don't even realize why they're attracted to real estate, other than that they see, big numbers in the
Right.
transactions. But going to the tax benefits of owning real estate for yourself, the additional tax benefits of owning rental properties, right? Yeah, it's so many extras that you get just by being a property owner. So much flexibility in your life, so many things that well, I don't want to hype it up too much, but you get my point. They'll
but
be
I
nice.
but I get why people fear it and they hesitate towards it because it's the unknown. You don't you don't know, you don't a lot of people don't know about those benefits. A lot of people struggle with the worry of, well, if something goes out, I got to take care of it. If this go That all comes with budgeting. That all comes with learning the game. If you're disciplined, you know that you have to save up a certain amount of money just ready for repairs.
Yep.
Because unbeknownst to you, that's basically what the person that you're renting from is doing. That's basically what every month when you're paying them their rent, they're putting a little bit to the side in case you call them and the toilet goes out,
Mhm.
in case you call them and the AC unit goes out. They're setting all of it. They have warranties and stuff in place that they're paying. So if something like that happens, it's taken care of. You just don't feel it because it's just as simple as saying, "Hey, such and such, I paid the rent, but this just went out," and then they send somebody to fix it. But you can do that same thing while owning a home. It just takes a little bit of discipline and a little bit more learning on what you're going to need to save up money for and how to counter some of those costs.
It's just like owning a car. You don't expect your car to run forever. You have to spend money routinely for your checkups. You know, I probably purchased more windshield wiper blades out here in Bakersfield than I've done ever in my life in
I
Indiana.
feel-
And it doesn't even rain here, man.
It's because they get dried out during the summer.
Man, they make a killing. We should manufacture windshield wiper blades. But anyway,
That's
you
what's
got to
next.
spend that extra.
Hmm, hmm.
You got to budget that extra money because you know the one-time cost isn't always a one-time cost, but the cost of replacing a toilet versus throwing away your money by renting when you can purchase,
Mm,
it just doesn't make sense.
doesn't, doesn't. What do you think, in your opinion, with speaking with people, what is one of the biggest fears people have for buying?
That it's
Why
going to
do they
cost a lot
hesitate?
of money out of pocket. You know,
Mm,
and it's always an extreme. It's either going to cost me a whole lot of money to get the house, or I can get a house for no money. Like it's the extremes, man, with people. So one, no, there's zero down loan, but that doesn't mean you're gonna get the house without having any money.
mm,
You know, it, it, that's usually the big fears is, and then also, uh, for some reason people want to buy it right to make sure it's theirs. I don't know where that stems from. Maybe people getting swindled out of their homes, but people fear that they do because it's the largest purchase typically in your life, right?
right.
So if you give somebody some money and you don't retain the property, now I know my father-in-law. This situation happened to him and my mother-in-law where you know they had the property and they basically got swindled out of their money. They they were
What?
they were doing rent to own type of deal direct, and man, lost all that money, man. So I can
Guys took off.
gone, gone,
Ah,
and went, lost the house, nothing they could do because they didn't have the appropriate paperwork. And I feel like there's situations where that has happened in the past, and that's come forward in our generation. So it kind of it resonates more because when one bad thing happens like that, everybody's gonna know about it, and everybody's gonna
everybody.
be fearful. You
True.
know.
Very true. Very true. Yeah, I think man, that is a crazy, and that's definitely something that would get passed down to the next generation.
Hmm.
That fear, like that, like I saw a lot of that going after the bubble burst, hearing how families spoke about buying real estate after that if they got harmed by it, and it was just, I'll rent from now on. I won't even take the. And it's just you're caught in that fear, that fearful mindset because this one bad thing happened when really that was just a lack of knowledge or help that
Yes.
you could have tried to seek out. I know for me, and that's one of the biggest things I noticed when talking with people or dealing with people. It seems like people just are scared to even ask. It's almost like they feel like they should know already, so they're scared to even ask, or they act like they know more than they do because they heard their uncle say, well, you got to have 20% down when you're buying a house. You got to have this much saved up. And so they're coming up with this imaginary number in their head. One, when you're starting off, that number seems almost insurmountable.
Yes.
Like you're trying to save up that much money while paying X, Y, and Z already. You may think buying a house is just not for you just because of that. But because you're speaking with the wrong people or you're asking the wrong questions, you aren't finding out the true information that you need to. And it's okay. It's totally okay to feel dumb for a little bit. Like speak to the right people. Call a lender,
Hmm.
call a realtor, get those details so you can find out exactly where you need to be. Because that's one thing I love it when I do get to talk to people and I start breaking through some of those myths and helping them understand. Like, no, you don't need that much to save, that much saved up to buy a home. You could have as little as 3% down. You could have as little as 3.5% down. Like, you don't have to have that much money stacked up to actually be able to buy a home. And then depending upon your credit, there may be programs that help you pay that down payment down too. So there's so much help and so many things out there, but I think a lot of people get in their own way, whether that be through, like you said, someone in the family or a friend having a bad experience, or them just having a healthy fear of looking or feeling stupid for a second just to ask the right questions to the right people.
Yeah, and man, definitely. We grew up with Google, right, in our young adult years. So, and I remember when bought the first house, it was kind of like, yeah, I'm going to go buy a house, and my wife was
Mhm.
like, yeah, how are you going to do that? I'm like, I don't know. We're going to figure it out. you know.
Bold move, bold move.
Shoot, man, I called my cousin. She connected us with a guy. I sat down for 2 hours with him, man, and just kind of walked through everything, every question that I had, anything that I Googled. He answered the questions and then came up with a roadmap, and you just follow the plan, you
Nice,
know, and then
nice,
go. So,
nice. Did and so once you go like when you were Googling, was it creating more fear for you or was it giving you relief?
man, it confused the hell out of me, man. Because it was like, oh, I can get this program, or maybe I can get this program. Because you want to, it's like it goes back to what you said, man. You want a deal,
Right,
right? You want to get the
right.
best deal. But at the same time, it's like you go to somebody who can show you based on you and your qualifications what it'll take to give you that roadmap. And man, that's basically what I did. And then just remember too, when you get your first loan, it doesn't necessarily mean you got to stick with that loan forever. If there's a
Right.
better offer that comes up or a better rate, or hey, I want to take it down to 15 years or whatever, you do what you can. You do what you do. You're not locked in for life. That was the one thing that I did not know. I thought I had the
Mm.
loan, and that was it. I didn't know
Thought you were stuck for
anything
30
else.
years.
Yeah, I thought that was it,
Uh,
man. Like, all right, I got it. We're good. But no, I learned maybe 3 years afterwards that I could refinance. And man, I was like, because when we bought the house mortgage was already less than what I was paying for rent. And then when I
man.
refinanced, it was even less.
Oh,
So
see. Just be see, but that's the key thing. You got in the game. You got in the
yeah.
game and learned while you were in the game instead of waiting and learning and then figuring it out and then trying to get in the game late. That was a smart way to do
Mhm.
it. Good shit, man, man.
Yeah.
Yeah,
What do you,
man. Shoot.
what
Oh
kind of
wait.
advice, man? Whether it's somebody looking to buy their first property to live in or go out and get a investment property, what advice would you give for them?
Man, first, me personally, if I could go back, I would definitely have my first property be a multi. Because you can use an FHA loan, first time homeowner loan, on up to 4 units. I would definitely, if I was younger and I was getting my first home, would look at a triplex or a fourplex and stay in one and rent the rest out. Um, that's what I advise the young people. Like I said, I know most people want to get into it, and you want your first home to look a certain way and have a certain feel, but that's just me thinking and learning how this game works and how money works now. That's how I would approach it. I wouldn't go for the high glamorous one. I go for the 4 unit, build up some equity, and then cash out later, or use that as cash flow that would go towards my income and use that to buy a bigger home later on down the road.
Man, and that's true. I think just to kind of to say it out loud, if you buy a house, and I'll use just round numbers, for $100,000, and you live in that house for 10 years, and that house is worth $150,000 when you sell it, you're gonna have 150,000 in equity when you sell it because it'll sell for 150 plus the
Mhm.
amount that you paid off of your
Exactly.
loan. So when you sell the house, the difference between what you sell it for and what you owe for your loan now is yours.
Yep.
So you can essentially take that difference, and then over time, as you advance in your job, you're going to get your 2, 3, 4% raises throughout the year, and years, and you save over a 10-year period, you'll have another percentage that you can put on the house cash.
Right.
So you can take your equity, your extra stuff that you saved, buy a bigger house, and still be in the same payment structure. And that's how people move on up.
The true monopoly, the true monopoly game. Like I have a friend that I work with, and I've helped him with several deals. We had this conversation all the time. He literally went from like a 2-bedroom home, fixed it up, sold it, bought a bigger home, fixed it up just a little bit, sold it, kept ended up buying, basically bought 2 homes, stayed in one, rented out the other one, and has literally continued to do this over the course of like the last 10 years. And now doing that, he hasn't changed anything, isn't working any extra hours, didn't get another job, a second job, has literally just built equity in homes to the point where now he's like in $1 million home. He's staying in $1 million home, and then he has 4 rentals that are help paying not only this, paying those more. Well, 2 of those homes are already paid off because he's just how he's flowed his equity, and then one of the rest of the rentals are paying towards his house he's staying in right now. And that's just been the game he's played, just the slow level up. It takes time. It's definitely a patient man's game. The number, like you said, the numbers they're chunk, and it seems very sexy, but you will need to be patient to basically reap all the benefits of it. But it's definitely one of the fastest vehicles to build
Man,
well.
man. And you made it sound so simple. Just buy one, fix it up a little bit, sell it, buy another one.
That's it really, because you're already residing in the property. Take your time. You don't, when you're staying in it, you don't need new cabinets ASAP, unless they falling off the wall. But slowly add things on, change the cabinets out, upgrade the bathroom, a little bit at a time over the course of, a few years, and start adding up that. And then all of a sudden your values increased, dang near double. And you can either decide to, like I said, either rent it out at a higher rent rate or sell it and double up. Buy something for you to stay in and buy something that's a rental. But I'm seeing people do this all the time. And like I said, like with my friend, I love it because we literally talked about his humble beginnings when he was sitting there when we closed on this house last year, closed on this, like I said, $800,000 house. And we're just sitting in the driveway talking about humble beginning, like literally how it started. And it just started with one seed. It's literally like it's like growing a forest. It just started with that one house. It's like his first seed, and then everything sprouted from there. But it all, like I said, it starts with learning, eliminating that fear,
Mm-hmm.
speaking to the right people so you get the right information, so you do know what to do, what not to do, and then taking that leap of faith in yourself. Trusting the process, understanding that even if stuff goes sideways and before you end up losing the job or something happens to it, like you can sell that home. You can sell that home and get something back. Whereas, like if you're dealing with a landlord and they decide to sell the home, you got to go find somewhere else to stay.
Exactly.
So that's the cool thing with it. Is like that's why I try to get under people, because I've had this conversation even with people in my family to get them to understand, like, yeah, it's a possibility. Everybody has that fear of losing the home. And I think that's the mentality of keeping up with the Joneses. You have this fear when you reach a certain level, you're hella scared to come back down, and just understand life happens sometimes. Life happens sometimes. It comes up, it creeps up when it needs, but understand that home, that's a key wealth generator for you. And if things go absolutely to shit, you can still turn around and sell that and have emergency funds to do something, reset the clock, kind of take the time to kind of sit still, figure out what you're going to do next, and bounce back.
Yeah. Man, straight up, man. I was listening to something this morning. They were talking about all the foreclosures that's pending right now and how it'll be different. And you compare it to like 2008 where the housing values were plummeting
Right.
when you couldn't pay, you couldn't get out of it because you couldn't sell it for what what you had into it. So they're doing short sales right now. Even if you can't pay, you're going to foreclosure. You're unfortunate to not have income to be able to pay your mortgage. More than likely, if you live in America, your home value has went up over the time. So
You got
you
some
can
equity.
still sell it, and you can probably walk away with a little mini bag right now and get yourself back on your feet, rent,
Mhm.
and reestablish your credit and go from there. Um, man, it's just so different right now, man.
Very
It's
true. Very
it's,
true.
it's just so
With
different.
everything going on, the market's definitely different. Still a very, very strong seller's market. As of right now, we don't have enough, and this is just a nationwide thing. There's not enough inventory for how many buyers are out there. So homes are selling, not only selling for over asking value, they're selling fast.
Mm.
They're selling really, really quick. So as Marcus said, more than likely, if you're in a home and you're in one of those situations, like you have equity in your home, whether you know it or not, you more than likely have equity in your home, unless you did some crazy refi um, recently. You're going to have some equity in your home that you can actually use and get out of a bind. If you, a lot of people are exiting out of California so fast because they're tired of whether it be the governor or taxes or whatever the case may be, but they're sitting on a fat chunk of equity that you can use that and make your next move. Start your next adventure.
Oh, hey man, again, a timely topic for the week, man. To our brother Tavante, catch you next
Yeah,
week,
yeah. The
brother.
guru, the guru.
The guru.
Yeah, yeah.
But we got more coming for you guys in 2022. But
Yes, sir.
definitely go buy your house. Go buy your house right now, because it's only gonna as it heats back up in the summertime. Go get you a
It's
house.
gonna be crazy. Yeah, don't and if you aren't sure if you can get a house, call me. Call me. We can figure it out. Like that's why I always tell people, if you want to buy a home right now, that was another thing I wanted to bring up. Some people are just scared to get the bad. They feel like they're going to get bad news. They feel like they won't be able to do it. I love surprising people when they find out that they can qualify. So I always tell people like this: it's never bad news. It's just news. It's just information. So understand one or two things are going to happen. Either you're going to find out, great, you qualify right now for this much home, and you can go start shopping right now because your credit's good, your debt to income ratio is good, you're doing a lot better than you need it to be. You can qualify right now, or you're going to find out what you need to do to get qualified. You're going to come up with a game plan. So now you got to structure a game plan so you can set a date, whether it be by the summer, by next year, whatever the case may be, that you are able to buy. But get the information. Don't sit still. Don't sit there scared. Just find out what you need to do so you can start doing the right things to get qualified and buy a house.
Boom. Well, hey man. Again, thank you, brother.
Same to
And
you, my brother. Same to you.
everybody out there watching, please go ahead over to our YouTube channel, click the like button and subscribe, and share this video for anybody who needs to understand that they need to buy a house right now. Or if you got any more questions, like JD said, go ahead, hit them up. But everybody
Yep.
out there, peace.